All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today what we're going to be talking about are some of the top 5. I understand it says top 10, but I got the 5 best dividend growers in the past 10 years. We're talking about dividend growth rates that trump the 95% list. And look, this is not a 95% dividend. What this is these are companies which have grown their dividend over a 10-year average about 95%, 45%, 36%, which is what I want to show to you, because if you guys subscribe to this channel, you guys are most likely a high yield investor. And look, these dividends might not be high yields. They might really have low yields, 4%, 3%, 5.3%, 7%. But the reason that I'm showing you is because I invest currently for high yields. But the thing is, once we get all of this monthly income, we can then pretty much decide what we choose to do with it. And in the future, I plan to hold YMAX for a very long time. But do I plan to only solely invest in YMAX for the eternity of my existence on Earth? No. What I plan to do is I plan to take this $136 from YMAX, which is continually growing every single month, and invest it into great long-term companies. That's what I'm looking to do. I'm looking to create fantastic monthly income, a dividend source which grows and compounds on itself to then buy amazing long-term companies. And today what I want to do is I want to show you 5 companies: FMC, DVN, we have GPN, Global Payments. These are all companies which have grown their dividends by fantastic measures, double-digit measures over the past year. So we're going to get into that in today's video. So if you guys do enjoy it, we are up to 5,353 subscribers, so please do subscribe if you haven't yet done so. And today, before we get into this video, just a little update on the YMAX position, currently holding about 195 shares. Average cost basis is $19.34, which produces me about $136 in monthly income. $136 in monthly income could buy me potentially 2 or almost 3 of FMC Corporation, ticker symbol FMC. And you'll notice here, these are all more so long-term companies with a decent track record. And then you look at this FMC over the past year and see it has pretty much tanked half in value, over half in value. It's trading at about $130, dropped all the way down to $50. The reason we're talking about it today is not due to the price drop, but instead due to the fact that they have been growing their dividend really well over the past 10 years. And what I do want to do here is go to their dividends only. Let's go to their max history and see how they've been growing it over the past couple of years. So we see here that they went from 58 cents in a dividend. They bumped it from 53 cents to 58 cents. Prior to that, 48 cents. So you can see here, they're a consistent grower every single year, been growing their dividends. And the reason why I think this is so high for FMC is because they started about it's about 7 years ago, where they were paying out 14 cents per share and had this huge jump to 40 cents per share. Now, at the same time period, you notice that the stock share price did take a bit of a hit. And by a bit of a hit, I mean a huge hit, a 50 to 60% decrease. Of course, some people view this as a buying opportunity. Totally depends on the underlying company. Of course, earnings per share looks pretty good when compared to the forward dividend rate, but totally depends on the financials of the company. We're not diving into that. We're talking about the dividend yields and dividend growth rates. With our next company, DVN is a ticker symbol, Devon Energy, which is a natural gas company. It's one that I've covered in the past, roughly about a 5% dividend. And its dividend growth rate, if we just check that going back here, is roughly about 45.7%, a fantastic dividend growth rate. And when you're taking this $136 a monthly income, your monthly income could be different. Could be $50, could be $1,000, could be a couple $1,000s. When you're taking this and investing it into long-term companies, like for example DVN, not saying you have to, but this would potentially be viewed as a long-term company hold, then this company will continue to pay you stable and reliable dividends for years and years to come. And that's really the reason why I invest in these high yield companies, well, more like ETF, which is the YMAX ETF. It's because they'll be able to produce me this huge monthly income, which I could choose to reinvest a portion back into YMAX, grow that position, and then a portion into amazing long-term companies. Not saying that these are amazing, just showing you the highest dividend growth rates in the stock market in the past 10 years. Going to our next stock, which is GPN, Global Payments. Global Payments, and I do have every kind of company's website up here. Global Payments is basically like a software and a payment platform for bigger businesses like H&M and more known brands like Kiko as well. But basically, they facilitate all these payments, kind of like Visa in a sense, but more on an e-commerce scale. I haven't read too much into the business, but when looking at the earnings per share compared to the forward dividend, it's looking pretty good. Small dividend, yet they have been growing their dividend. If we look over here for about 30 over a 10-year period, about 35% on average, which is fantastic, more than fantastic. Going to our next company, because we are jumping through quick. Commercia, something like that. Commercia Corporation, ticker symbol CMA. 5% dividend, not a terrible dividend by any means. Earnings per share more than enough to cover the forward dividend, but really we'd like to see this double or even triple, quadruple. The more the better for the earnings per share to cover this dividend. It means that the company's making money and they are potentially sustainable with that dividend for a long period of time. Commercia is a financial and wealth management company, and not to get into them too much, but let's see what they pay in terms of a dividend. They pay a 36% dividend growth rate over the past 10 years. I keep saying dividend because I'm used to these high dividends, but this is the dividend growth rate over the past 10 years, which is really fantastic. Then going to our last company, ticker symbol BBY, no introduction. It is Best Buy Corporation. Of course, you probably know what Best Buy is if you have anything to do with technology, know anything about that, or are buying technology. The earnings per share is not amazing when compared to their forward dividend rate as a long-term stock, but you could see here that their dividend price has grown pretty substantially since their inception, which looks to be about 1985, very long time ago. But been doing fantastic as a company. Not so sure how the financials hold up, but it looks like their earnings per share is okay. It is not bad. But this was the 5 companies that I wanted to show you guys. And really, there's a list of 10 here if you want to take a screenshot and just take a look now, with companies that range from, it looks like a 19.3% dividend growth rate over the past 10 years, all the way up to a 95% dividend growth rate. So these are just some stocks where if you're earning this high monthly income, you could potentially reinvest, maybe try to look to get in at a good price for these stocks, but potentially reinvest a lot of monthly income from your high yielding investments into some potentially great. I'm going to keep saying potentially because I haven't really reviewed these stocks in terms of their financials, only the dividend growth rate, but potentially some fantastic stocks and some great long-term monthly income. So I hope you guys enjoyed this video. If you did, we're up to 5,353 subscribers. This 53 threw me off here. So I want to say thank you to everyone who subscribed to made this channel what it is today. I appreciate you guys watching this video. I hope this video served you well, gave you an idea of what potentially I might do with my monthly income from YMAX in the future, but this is way beyond. We're still reinvesting. We're still in the process. So if you guys enjoyed, subscribe, like, and I hope to see you guys in the next video.